Hi folks, welcome back to the channel. This is Jason, host of Fighting Words Financial. Let's talk about SoFi today and their Q2 results and the sort of weird reaction that the market had to what I think was pretty good results, especially for their first quarter after going public. So let's jump into that article right now. I'm just going to pull up what was published on Yahoo Finance. And it starts off, of course, with SoFi Technologies reports second quarter 2021 results, showing their graphs, of course, with members growing here, products growing, products by segment, and technology platform accounts. Those numbers are all growing, and this is something that we expect with a business this size. Let's look at hard numbers now, at least what they're reporting, okay? So total year-over-year member growth is 113%, accelerated for the 8th consecutive quarter, and now they have 2.6 million members on their platform. So their total products of 3.7 million is up 123% year over year, and they have record quarterly net revenues up 101% year over year, with adjusted net revenue up 74% year over year, right? So on the surface, this seems like this should all be wonderful news, and even when you dig down deeper, it really is wonderful news here, right? There's no getting around that. It's pretty good. So let's talk about a little bit why the market could be reacting negatively to this. So the second quarter proved to be another quarter of full milestones for SoFi. This is what Anthony Noto was saying. We exceeded our financial expectations, delivering record adjusted quarterly net revenue for our 4th consecutive quarter of positive adjusted earnings before interest, taxes, depreciation, and amortization. We drove our 8th straight quarter of accelerating member growth, which I think is kind of the most important thing here, with even faster growth in cross-buying from existing members. And this is a point that I've hammered on over and over and over. I've been in the financial industry for a very long time, and this cross-buying from existing members, who are your lowest cost and highest profit relationships that you have, is extremely important to creating sticky relationships and really high profit relationships with your clients. This is something they are really, really good at, and this is something that I've been on board with them from the very beginning. This is one of the reasons that I've been on board with them from the very beginning. This is actually probably a good time to disclose that I'm not unbiased here at all. I hold a significant amount of SoFi stock. I'm very bullish on the company. So keep that in mind as you're listening to my analysis here. It is going to be biased. I'm enthusiastic about this company. Not overly enthusiastic because that's just not my style. But that's, this is a company that I tagged early on as someone that I thought was going to be a player in this industry. So when we're looking at their consolidated net revenue here, we're looking at $231 million in 2021 versus 114 million in 2020. The percent change is about 101%. Those are numbers we went over. Okay. So the total, I'm going to skip down a little bit here. So SoFi recorded a $165.3 million net loss for the second quarter, compared to net income of $7.8 million in last year's second quarter. The explanation here is that they remeasured their valuation allowance during 2020 as a result of the deferred tax liabilities recognized in connection with our acquisition of Galileo. Galileo was the financial services company that they acquired last year. This decreased the valuation allowance by about $99.8 million. The absence of that tax benefit, together with the significant non-cash stock-based compensation, were expenses and fair value changes in warrants primarily related to the fair market value of SoFi stock. Those are the largest contributors to the current period net loss. So in this case, it's looking like a paper loss here. They're not actually like hemorrhaging money that you think they are in this case. So second quarter EBITDA was 11.2 million and was positive for the 4th consecutive quarter, and $35 million higher than second quarter of 2020 due to the combination of higher revenues across all business segments. And this is pretty important, all business segments here, because we're looking at the primary source for their income right now has been their loan portfolio. And now they're increasing and diversifying their sources of income at this point. And we're seeing all of those increase across the board at this point. So total members grew 113% year over year to 2.6 million, up from 1.2 million at the same point last year, and total products grew to 123%. So these are all very, very good things. So All right, so let's take a quick look at their lending segment results, which at this point in their, the lifestyle of this company, this is actually the most important revenue source they have. Lending segment net revenues of $166.3 million on a GAAP basis and $172 million on an adjusted basis for the second quarter of 2021 actually increased by 73% and 47% respectively year over year, driven by higher origination volume in every type of loan that SoFi offers. Now, most of their loan portfolio, as I've covered in previous videos, are actually student loans. That is actually starting to diversify at this point. So the lending segment contribution of profit was $89.2 million, and that's an increase of 80% year over year in the second quarter of 2021 due to the combination of revenue growth and strategic balance sheet management. I would like further clarification on what strategic balance sheet management means. Okay. So I'm going to skip down to some of the headwinds here. Despite various headwinds, SoFi has continued to trend, in expanding its base of product offerings and features in the lending segment. And SoFi, they've introduced a few new things like this rate match guarantee, also the snooze feature, which allows borrowers to lock in a current rate for a new student loan without beginning payments. All right. So they're also a little bit concerned here with what's happening in terms of student loan forgiveness and student loan payment moratoriums. We're going to get to that here in just a second. But they've refined their credit policy and automation capabilities, creating a faster and more accurate, with lower touch experience. More than 50% of personal loans processed in second quarter of 2021 were fully automated. This says a lot, of course, about labor expenses involved in underwriting. And that's up from less than 30% 1 year ago, which that should help improve their margins. And they reduced their time to fund by 50% down to 2 days. So they also have home loans. They have new rate calculators that help borrowers find the right loans for them and that sort of thing. So we're looking at personal loans being the largest portion of their portfolio in this quarter. Overall, student loans, I know from reading their the full thing of their financials here, that's still the largest portion of their revenues overall. But if you look in second quarter of 2021, it's basically that proportion is shrinking as personal loans grow and home loans grow over time. So so the company's also experienced significant growth in financial services since this year. Members have responded positively to new offerings. They have a bunch of new offerings in terms of services since 2019. Too many to cover in this video. I covered them in another video. You can take a look at that later if you'd like. I'll leave the link in the description. So they have a bunch of new services out there that are contributing to their bottom line and diversifying their product offerings. So let's get to, I'm going to skip over the technology platform segment results. They are important. I'm just going to talk about them just a little bit, and then I'm going to skip over. So total net revenue was $45 million. That's up 138% year over year. So this is Galileo Financial Technologies, a company that they acquired in May of 2020. A lot of what's going on there just hasn't reached maturity yet. They only have $45 million in revenues. What I want to talk about is why the stock may have gone down after hours and may have gone down today. So let's take a look at that right now. And I'm going to disclose right off the bat that I don't think it's that significant. And I think it's an overreaction. And I think this represents a good opportunity to get into the stock. I already own a lot of the stock. I'll probably be buying more to sort of average my costs down a little bit. But second quarter 2021, adjusted net revenue of $237 million actually exceeds quarterly guidance of $215 million to $220 million by 10% at the low end and 8% at the high end, which is good. So your adjusted earnings before interest, taxes, depreciation, and amortization of $11 million for the quarter exceeds guidance of an $8 million loss to $2 million profit by about $19 million at the low end and $9 million at the high end here. So management expects continued growth in third quarter of 2021 with expected adjusted revenue of $245 million to $255 million and expected adjusted earnings before interest, taxes, depreciation, amortization of somewhere between negative $7 million and $3 million. So they reiterated this point that full year 2021 guidance of net revenue of $980 million and an adjusted EBITDA of $27 million. This is despite lowering their expectations of student loan refinancing by about $40 million due to the extension of the CARES Act moratorium on student loan payments from September 30th to January 31st, 2022, right? So this is $40 million that they were anticipating on collecting on their student loan portfolio that they're not going to be collecting. They don't think this is going to impact their bottom line, and they've left their adjusted net revenue guidance at $980 million, which isn't different from last quarter. They think they're going to make this up from other platforms, right? Other offerings in their portfolio businesses. So they've reduced their technology platform revenue by an estimated $12 million, right? So they estimate that they're going to bring in about $12 million less in revenue due to the minority stake they had in Apex, which was bought back by Apex because they're planning to go public. Okay, so that's $12 million that they won't be making, but they did get a one-time payment for that. I'm not sure exactly how that's reflected in financials at this point. So management will further address third quarter and full year 2021 guidance in that quarterly earnings call. I was on that quarterly earnings call, guys, and I got to be honest with you, I didn't hear anything on that call that changed my opinion of SoFi. I think this is an overreaction to them adjusting, their revenue guidance based on the extension of the CARES Act moratorium on student loan payments. I think that the loss of $12 million in revenue from Apex Securities being bought back there, I think they held up to 16% of Apex Securities at some point. I don't think that that's actually going to significantly affect their bottom line. I think they're going to do a lot of business in other parts of their portfolio business offerings, including banking, which they're in the process of finalizing their banking charter. Once they do that, they're actually going to benefit from deposit operations, which is something they really haven't benefited from before. And we're going to see really sort of a change in the way their financials look here. 95% of this is positive, in my opinion. Only 5% of this is negative, and most of that is related to something which is beyond their control, which is the CARES Act moratorium on student loan payments. Anyway, guys, this is my opinion on SoFi's quarterly report on their second quarter earnings from 2021. Feel free to disagree with me at any time you like. I am happy to discuss your opinion on this stock. Like I said, I'm not unbiased here. I hold a significant amount. If you have a reason why you think that I or my watchers shouldn't be holding this stock, let me know. I'd love to hear your opinion. Thank you very much, folks. Have a nice day, and I'll see you next time.